Good. Hey, Jordan, how are you doing?
Great, Gary. How are you doing?
Good. So we are recording this webinar just to showcase and give value to our clients who are asking a ton of questions right now about what's going on in the market during COVID-19. And I thought it'd be a great opportunity to just have a fireside chat with you and discuss what's going on in the mortgage world. So Jordan, the first thing my clients are asking is what do I need to know regarding mortgages in this time? What kind of advice can you give?
That's a great question. You don't even have to be watching the news. You just hear it from friends, from family, from everybody. So much is going on in the mortgage world. I mean, so much is going on around us, obviously, with this pandemic, and it's absolutely affecting, lenders, mortgage policies, the Bank of Canada, everybody. I would say there are several points. So the first point I'd like to make is more than ever, I think clients really need to make sure they've got a team in place. I'm always saying it. So your team can be, your realtor, your preferred mortgage broker or mortgage specialist. If you don't have a lawyer, it's really important to get in touch early with your lawyer and get everything prepared even before you're looking for a property or looking for mortgage financing. And the reason that that is the case is that everything is more complicated. Getting financing is more difficult. There are so many more policies in effect that we haven't even seen before. It's changing daily. Purchasing is taking much longer. So just the general process. Not only, as you would know, it's harder to get into to go see homes. So we're having to adapt to that. Getting appraisals. Appraisers can't even get into the home. So they're requiring the help from either, the homeowners or the realtors to do the interior inspections. Everything's taking a little bit longer. And when you work with a team, they're communicating with one another. So with you, Gary, I'm keeping you on top of everything that's going on with your
Yeah.
client. So you know where they are in the process. You
Exactly.
know if there are any bumps that I'm encountering. And trust me, there are lots of bumps right now. So
Especially when stuff is changing every day, right?
every day, every day. And my job as a mortgage broker is to keep on top of that and to make sure that I'm informing my realtors and the clients as well. So if they'd started the process of looking for a home a couple of months ago, well, I can tell you it's very, very different now. Another point, we're definitely seeing lending guidelines tighten up. There's so much more scrutiny now. I mean, what's
Can
the
you elaborate
unemployment
on
rate?
that?
Yeah, absolutely. So we've had, what is it, a million people almost applying for unemployment. We've got the CERB.
Yeah.
People are losing their jobs,
Yeah.
or there's definitely employment, uncertainty. And lenders obviously are very aware of this. So one of the things that they've recently, literally just a few days ago, have brought in, all income documents need to be provided up front with your mortgage application before they'll even issue a commitment.
Wow.
Now, remember what I said, Gary, it's going to take longer to get that commitment anyway because
Yeah.
everything's taking longer. So we need to make sure that all clients have all those documents already. It doesn't matter if you're salaried, self-employed, if you own a business, we're going to have to look more into that. So we need all that stuff right away. Otherwise, it's just going to take it's going to take a long time to get a commitment.
What was it like before? Before COVID-19, what was the process, and then how has it changed now?
Well, you could submit a mortgage application without providing income documents to the lender. They
Uh,
would then provide what's called a conditional
I see.
commitment,
Yeah.
and then we'd start sending in those documents.
Yeah.
Now, as you know, I don't even do a qualification for my clients without having those income documents.
Of course.
So my process isn't really that different, but there are certainly some clients out there that might not have all their documents ready to go. And when I say documents, I mean things like their most recent pay stub, a job letter. We need that right now, not in a week's time. Your T4s, T1 generals, full T1 generals if you're self-employed, financial statements from your corporation. We need all that now. So that is definitely a difference. And I think, Gary, too, we're going to see that moving forward. I don't think lenders are going to say, okay, now that COVID-19's finished, we'll go back to the way it was. I definitely don't see that happening.
You think it's a new standard going forward?
Absolutely. Yeah. Yeah, absolutely. So no longer can you get by just saying, oh yeah, well, you know, I make a salary of $80,000, go with that. It's not going to happen. Yeah.
So you need all the documents before you submit it.
Yes. Yeah. Basically, it's upon submission. So you would submit the application, and then rather than getting a commitment back, the lender would say, okay, now give me all these documents. And then I'll issue you a commitment.
I see.
Yes.
And so it looks like it's makes it easier for the lenders to make a decision. And shouldn't that reduce shouldn't that reduce the time it takes for them to issue a commitment? So like does subject removal shorten in this kind of period? Or
well, there are a lot of other factors at play. Lenders have been overwhelmed with applications at this time, not just for purchases, but also refinances, people wanting to do home equity lines of credit to give themselves a buffer. So everything is taking longer. I would still say that for a subject removal, and remember, if you need an appraisal, even that's going to take a little bit.
What's going on there now with appraisers?
Pardon?
What's going on with appraisals these days?
Well, appraisers are no longer allowed into the home to do the interior appraisal. So they're using technology, whether it's having the homeowner or the realtor FaceTiming so that they can see the interior of the property and taking photos themselves. Now imagine you've got, so I just had somebody, you know, we had an appraisal and the homeowner took the photos themselves. Well, lots can go wrong there, right? So homeowner doesn't take a photo of several rooms, or, you know, they're horrible photos or whatever, and you have to go back. They're not used to having to take 60 photos of their home for appraisal purposes. Yeah. So it's been great though. Appraisers have really come to the front, and using technology now, we're able to still get it done, as well as lawyers as well. They're definitely using technology, you know, like Zoom signings, some of them. I'm only going to say some of them, which has never been done before.
Yeah. So in the past, you could see subject removal as short as like a couple days. What do you see it now? What's it like now?
Lenders are really asking, truthfully, for up to 14 days.
Wow.
Now, they are definitely aware that we have subject removal dates, and they will prioritize their files.
Oh, good. That's good.
So if they see that it's a purchase, they're going to get to that one before they do a refinance, for example.
I see.
But they're busy. I mean, they're really busy, right? Everybody's calling saying, I want to defer my mortgage payment. So they've had to deal with that. And like I said, an overwhelming amount of applications. So, and they're all working from home too, right? So it's definitely taking more time.
So what would you say, like not only so subject removal, leave more time for subject removal, and like, but still a lot of clients are asking me about like the uncertainty, the economic uncertainty. So they're asking me questions about where the market is going, or like, are the prices of homes going to drop significantly? And I know a large part is related to what banks do, whether they drop the interest rate, whether they increase interest rates, what's what's gonna happen with prime. And what are your thoughts on that?
Yeah. Okay, well, I'll start with the prime rate. So the Bank of Canada just this morning kept their key interest rate the same. So prime rate is still sitting at 2.45. Now
Okay.
that is very low, but the Bank of Canada has said they are not going to lower their rate any further. There's nothing else in terms of lowering rates that they can do to stimulate the economy. They're doing something else. They're buying up bonds right now to increase liquidity and access to funds to try to keep the economy going. Rates are going up and down and up and down. It's like a roller coaster. So fixed rates were really low, then they went up. Variable rates, went down, and now they've gone up as well. So they're really going up and down. So it's really a kind of a difficult game to play. You just don't really know what's going on with rates. The economic forecast is so tightly linked to what's going on with this pandemic. So it's so hard to see and to know what's going on. I mean, it is changing
Yeah.
day by day.
And I'm sure like in your mortgage world, there's different professionals offering different opinions. What kind of
Yeah.
positions have people in your industry? Like some are thinking this and some are thinking this. What are the positions that you've been hearing?
I think certainly economically, in terms of prime rate, we seem to all be on board with that, or of the same belief that it is going to remain low for at least a year, if not beyond.
Okay.
I think generally, we know it's going to be bad. I think we're kind of all on the same page.
Mm-hmm.
The economy is going to be very, very, very hard hit.
Mm-hmm.
And I think that, fixed interest rates are going to continue to stay.
Okay.
I mean, they are relatively low. We just saw
Mm-hmm.
them drop again. We're all trying to wonder, how can we help people? And I've heard some interesting solutions as to how to create, how to create some peace of mind for borrowers and get people to continue to buy into the real estate market, which is huge in Vancouver.
Mm-hmm.
I've recently heard of the suggestion of a 40 or 50-year amortization.
Wow.
Yes, still using the stress tested qualifying rate, but stretching that amortization out so long that your monthly payment is really low, right? So you still have more cash.
So that is going to be proposed, or that's just
Well, we have we have a broker in our industry who is quite a thought leader, and he is saying that this might be a good idea.
Okay.
I don't know if anybody's going to get on board with that at all, but it's an interesting
It
it's
is.
an interesting suggestion.
Mm-hmm.
In terms of what it's going to do to the real estate market, yes, I am definitely hearing differences there. Some people think that the real estate market is going to be, or the prices anyway, are going to remain fairly stable.
Mm-hmm.
People still need to buy. There are still buyers out there.
Yeah.
And many believe that due to the fact that there are fewer buyers and this economic uncertainty, that prices will drop.
Mm-hmm, mm-hmm. And like for you personally, have you seen an increase in business in terms of other mortgage brokers are really struggling to handle like all the applications coming in, or is it more slower across the mortgage broker industry?
Our jobs right now as mortgage brokers are really to help our clients.
Mm-hmm.
We're not out there trying to sell you.
Yeah,
Give me a mortgage, give me a mortgage. You've got bigger things to deal with.
Yeah.
Everybody was kind of, they're in their own process. When the pandemic hit, people were still buying. So I
Yeah.
definitely have some buyers who are just completing their purchase transactions from now and, for the next few months. What we saw a lot of were refinances because rates were really low. So
Yeah.
people could definitely get a better rate.
Yeah.
And home equity lines of credit, or just people trying to pull equity out of their home to give themselves some buffer, because we just don't know what's going to happen. So for those who were able to access some equity, that was, potentially a good idea. So we're seeing more of that.
Yeah. Yeah.
Yeah.
Okay. So last question. I want to ask you about, what are your thoughts on what kind of action should people be taking? Should they be just waiting on the sidelines and seeing how the pandemic goes, or should they be taking some sort of action regarding their finances?
Oh, well, I definitely think that people should be, looking at their finances. If you can save even just a little bit, save just a little bit. I mean, we have a ton of programs out there that if they are right for you and you need help, take advantage of them. So one of the things is the mortgage deferral programs that the banks are all offering. If you need it, take it. If it's going to put some extra cash in your pocket and a roof over your head, absolutely do it. I would, if you are considering buying a home right now, I would definitely suggest speaking to, Gary or your realtor, myself. Let's take a look at what your employment status is. The answer might very well be, now is not the time for you to buy. You're not going to be able to get a mortgage.
Yeah.
Right? However, we can prepare you for that 6 to 9 months out. If you're looking at buying, but it's going to have to be down the road. I always think preparation is key. With mortgages, you don't want to just, jump in. I also don't think that you should be taking on a mortgage out of fear. I'm seeing some lending institutions. I don't want to name any name.
Yeah, for sure.
But they're saying, hey, we can help you. We'll do a loan on your home. You don't want to be caught without any money. Don't jump into anything like that.
Yeah.
Please talk to an independent mortgage professional,
Yeah.
to get advice on that. You definitely don't want to be, making any decisions based on fear.
So I've been working with a lot of buyers these days, as they still need to buy, and they're asking me, Gary, should I get a variable or a fixed mortgage? And what are your thoughts on that?
That question is the same all the time. We choose a variable or a fixed for different reasons. Fixed rates, they are very low, and they do give a borrower peace of mind that their payment is going to stay the same. They know they're locked in for 3, 4, 5 years. For many, they sleep better at night with that.
Okay.
Even if that rate is slightly higher than what they could get with the variable rate.
Yeah.
Now, the variable rate option right now is fantastic as well. However, for those people that do not want to see a fluctuation in their mortgage payment, and if that causes stress, maybe the variable rate's not great for you. But it definitely does offer, more flexibility in terms of the prepayment penalty is only 3 months interest. So if you're buying something and you think there might be a chance that you have to pay out your mortgage, for example, in 2 years or 3 years, you're just not sure,
Mhm.
Maybe the fixed rate isn't great for you
I see.
because of the payment penalty.
Ah.
The variable is definitely more flexible and
Mhm.
certainly cheaper. So we look at those things beyond just what the rate is, because it comes down to more than just the rate when determining which one to take.
Okay, so it's not a specific like, oh, during COVID-19, variable is the way to go, or fixed is the way to
No,
go. There's no one size fits all, right?
no, I mean, I'll give you an example. It was actually from a broker. We had a very, very short window a few weeks ago. And when I say a short window, I'm talking, 4, 5, 6 days where variable rate discounts were, prime -1.
Wow.
So if you happen to snap up a variable rate mortgage at that time, you're now paying 1.45% on your
Wow.
mortgage. Yeah, wow, right? That's
Wow.
incredible.
Yeah.
And this was actually a broker that said this to me. He said, you know what? I'm going to take the fixed. I know it's more expensive, but I can sleep at night and I want that.
I see.
So he knew it was cheaper, but again, it was just his peace of mind.
Hmm.
I also think for rental properties as well, especially with fixed rates being so low, when you've got a tenant who's paying, you don't want a fluctuating mortgage payment. It's nice to know that's my mortgage payment, that's what it's going to be. And, I know my rent is X amount. And so sometimes good with rental properties, a fixed might be a better option for that scenario.
Okay. Okay. And do you have any like final words and thoughts and advice for the people watching this?
I do actually. I have one. I know I've spoken a lot. As you can see,
Mhm.
um, I'm trying to give as much information as I can. Things are just changing so much um, in terms of mortgages and how much you can get and require down payments and things that I haven't yet seen.
Mm.
So before you even start the process, whether it be that you're refinancing or you are renewing or you're purchasing, please talk to a mortgage professional, because what you heard 2 weeks ago or what your banker or mortgage professional told you 2 months ago is no longer applicable. Do not rely on that information because
Mhm.
it has changed. And so you need to know what the changes are and be informed.
Great.
Yeah.
Great. It's great talking with you, Jordan.
Thank you,
We should do more
Gary.
of these fireside chats
Thank.
as things pan out, as things progress in the pandemic. We may do some other ones of these.
Yeah, absolutely. I have no doubt, things are going to change.
Yeah.
So let's make sure we talk about that and share that information as well. Thanks, Gary.
Okay. Thanks.